So there is a term that we use quite a bit in real estate, and it is, let's figure out how much equity you have in your property or your investment or your home. And the other day I was meeting with a client and she said, hold on, Amanda, slow down just a second. I need you to explain to me what equity means. So I think a lot of times as real estate agents, we use these words so much and they just roll off our tongue so much because it's a common lingo for us to use, or they're common words that we use a lot. But the average consumer, they do not hear these words as often as we do. So we just speak as if it's a normal term. And so when she told me to slow down, a little light bulb went off in my head and I thought, wait a minute. Does the average consumer or the average client know what the word home equity is? So I wanted to take a minute and kind of explain that to you. Home equity is the difference between how much your house is worth and how much you still owe on your house. So once we come in and we run a market analysis on your house and we figure out the price of it, and in this scenario, we'll use an example of $400,000. Then we'll call your mortgage company and we'll see what your payoff is on the house. So in this scenario, we'll say that your payoff is $200,000. So we have your property that we're going to sell for $400,000. We have your payoff that is at $200,000. This in between right here is your home equity. So in this scenario, you would have a home equity amount of $200,000. So what a lot of my clients end up doing is we'll go find, they'll sell the current house they're in, and we'll use that equity to get them into the next property that they're seeking. Now, I have a few other clients, or another scenario would be where, let's say you really liked this house that we went and saw, but it didn't have a shop in it. So you could take some of that home equity that you have when you sell your house, and you could build your dream shop in the back. Another scenario would be a bunch of medical bills. I've had it where a scenario was, drowning in medical debt, or mom got sick or somebody got sick and they needed help. And so my client would liquidate the property or sell the property, and they would use that equity to go ahead and get into the next property or find their house that they like a little bit more. And then they would use some of that equity to help pay off some medical bills to do that as well. So there's a lot of cool things that you can do with that home equity. But I just wanted to make sure that using those terms, home equity, might give you a little bit more insight. So I always look at a home as a savings account. And every time you make that mortgage payment, you're just building that savings account higher and higher and higher. So when you are ready to sell, you have a large amount of equity to move into the next property or to move into that next chapter of life, to whatever your needs are.